everybody. I'd like to welcome you all to another episode of Tim's Tidbits. Just making sure all my lightage and everything is on. I yes, I spelled your name right. I was looking to see if I spelled Michelle's name right, and I did. I hope I did anyway. Anywho, hello. How are you? If this is your first time tuning in to Tim's Tidbits, I'd like to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for always hanging out with me and my homeboy. He's right over there by the name of Spidey. He's chilling by the window. If you don't know who I am, my name is Timothy Lee Rogers Sr. I got on a Bears versus Bull shirt and it has green in it so you can see through my body. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day, Monday through Friday at 9 a.m. Eastern Standard Time, 6:30 p.m. Eastern Standard Time to talk about the price action in the hopes to help someone like you get your aha moment when it comes to trading, investing, all things stock market. Help you make your money work for you so you don't have to work so hard for your money. Ain't that right? Michelle Taco! Michelle say her 9 to 5 keep making her miss stuff. You ain't missing nothing. Let Robinson tell it. Hey, man. The gurus at YouTube say, hey, Tim, you're not getting your subscriber count because you're not asking. So here's the ask. If you happen to not be subscribed, if you're in that 32 percentile that watches the videos, please hit the subscribe button. And please hit the like button. Because if you hit the like button, YouTube thinks that you like it, and then it'll show it to other people like you. And if you already subscribed, send it to your friends and family. Say, hey, I really enjoy Tim's content. I think you will too. Come on over. Join the gang. Join the gang. Here to learn and share on the top. What's up, Father Legends? What's going on, Randa Green? Guten Abend. Something in Japanese. And salute. Hola. I know all of them except for the one that's in Japanese. So the one that's in Japanese, I'm just going to say, ni hao. Michelle Tucker, welcome here. Welcome back. What's going on, KC? I'm your bug, man. Uh-oh. Y'all, hold on. Everybody move to the side for a second. Hello, Anna. Hello, Elsa. How are you today? How was your week? Did you have fun all week? So did I. I had a great week. It was vainglorious. I'm glad you enjoyed your week. Too bad we can't chop it up a long time now, but Uncle Tim has to get back to doing the live stream now. Have fun. Enjoy dinner. Bye-bye. What's going on, Laverne? What's going on? What's going on, Sanjay? What's going on, Tranisha? Konnichiwa. 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 Is that Japanese? Is konnichiwa Japanese? Might be. I don't know. Let's get into it, man. My arms are so sore. My triceps back here. I went to the gym and worked them out, and they are killing me. I worked out my triceps on Tuesday. Today is the first day where I can just do this right here without going. The other day, let me share this with y'all real quick, then we're going to get into the chart. Me and Junior was in the truck, right? I'm driving. I got ready to reach. I had an itch because my scalp be real dry and it be itching all the time. I had an itch, and I reached up to scratch it. I was like, couldn't do it. That thing was so tight. Boy, look at him. Man. Let's say hand pinky waving. Hey, everybody. Hey, let's get into it, man. Let's talk about that super sore. What's up, Hines? Hey, Hines. Hey, Hines. Hey, did anybody see the clip? Did anybody see the clip that I made? Hold on. Hold on. Would it be a Judas swing? The price action today? From if you look at from like the morning, like before we opened, you remember we was talking when we was like around about like 5-6 o'clock when it like started going down and made that low and went back up. That would be the Judas swing. Like the Judas swing would be the fake out to the bottom and then up to the top. You know what I'm saying? Fake out to the bottom, up to the top. And today would be like a power 3 day also. You know what I'm saying? Because we accumulated through the night, right? And then we gave the Judas swing down. You know what I'm saying? We went up above midnight, dropped below midnight, tanked, and then came back up, took midnight, and then continued up. You know what I'm saying? So that's the accumulation, manipulation, distribution. And then the Judas swing is the manipulation. You know what I'm saying? You got the manipulation, then the distribution. Or the other way, it could be manipulation, then distribution. So that manipulation to the downside, when we went down there, didn't take out those lows on the daily. And then we came back up. And by the end of the day, we took out the highs on the daily highs. So yes, that was the 6 o'clock, around 6 o'clock. We'll look at the charts in a minute. But when they look up DOMS, what in the world is that? I want to share this with y'all. I'm your boogie man. For anybody who did not see the whatchamacallit, for anybody who did not see the post that I made, where is it? There we go. Okay. Share video file. Share video file. Right here. This is what I want to share. We're going to 10 o'clock. Oh, we got news at 10 o'clock, don't it? It's news at, why y'all ain't tell me remind me it was news at 10 o'clock? How y'all gonna let me get in that trade and we got news at 10 o'clock? Y'all know it later. Appreciate that, man. Appreciate that. Y'all ain't even remind me we had news at 10 o'clock. Y'all let me get in that trade. Golly. Y'all pray for me. y'all pray for me. You got let's go. Let's get out of it. Get out of it. Get out of it. Get out of that tail. Get out of that tail. Get out of that tail. Yeah, I'm gonna let if it go, it go. If it go, oh, let me get my 5. Let me get my 5. I'm gonna lock my 5. Target. Okay, got it. Hey, I appreciate that, y'all. Father Legend, man. I appreciate that, but it worked out to my good though. Y'all see me? I say, let me get my 5. Let me get my 5. Let me get my 5. Oh my goodness. Abort. Yo, man, that was the day on the live stream. Someone tried to warn me that we was coming up on news, but of course, little Timmy Rogers wasn't looking at the chat. And so when I realized we was about to come up on the news, I'm like, oh man, we got news coming out. I need to get out this trade. And as soon as I went to get out the trade, it started wicking. And I'm like, oh, and it didn't almost take me out, but I thought it was about to take me out. But as you saw, the algos whipped down to that. It whipped down to that spot so fast. That's what ICTV talk about. Like when you be in the moves, it moves so fast. It like whipped down there so quick. And then when it started going back up, I just covered it so I wouldn't lose nothing. And then I was like, oh, let me lock in the 5 because we had been talking about going for the 5 points during the trade. We was talking about like, hey, if I was just going for the 5 points, the trade would be over by now. You know what I'm saying? But I ain't going for the 5 points. I'm gonna let it go for my 10. You know what I'm saying? Whatever. And then as I was moving it to try to lock in the 5, you saw it like quickly went up and hit the 10 points and kept going. But man, that was so funny to me. Yes, he did try to tell me. He did try to tell me, but I did. Y'all know I don't be looking at the chat. The link was in the chat. You supposed to pull up and be like, hey, Tim, we got news coming up. Don't take that trade. Today was a good day. I feel like we had fun. We, you know what I'm saying, got the opportunity to talk through a trade. We got the opportunity to talk through a trade. It was pretty much the same model that I used. The trade that I shared. Was it night before last or last night? Whatever night that was when I shared the screenshot, I was like, here's another journal entry. Whatever night that was, I used that same model again today when I took that trade. It's the same model that ICT used that day when he gave that clinic. It was the exact same model. I just, you know what I'm saying, walk through the price, you know what I'm saying, watch the candles, watch the price action. Once it showed me a sign that it may want to reverse, you know what I'm saying, watch those levels. Okay, boom, it broke this candle's high. Let's look for the reversal signal. It gave a reversal. I missed it, running my mouth. I was talking about something. I missed the entry. And then I explained to everybody how I'm still not able to take that retest entry. I promise you, I be wanting to take that retest entry, but it's like I got this unrealistic fear of taking that retest entry because I've been burnt so many times taking that retest entry. Hey, Mendez, get off my screen. I've been burnt so many times. Wednesday night. Thank you. Wednesday night. Right? I've been burnt so many times taking that retest entry and it goes the other way. And maybe I was getting burnt because I didn't have the knowledge of analyzing the price and knowing that we are reversing and was just getting in at the wrong time anyway. So that may have something to do with it. Hopefully I can overcome that fear soon. But I took an entry after the move had started based off of, you know what I'm saying, some other ICT teachings as far as like the opposite color candle support and price. We formed an order block, then we formed another order block, and then we had a fair value gap that was less than 5 points on the 1 minute. And he teach how if price is moving, you can buy those 1 minute fair value gaps if they less than 5 points, as you can add on at them points. So you know what I'm saying, just watching all of that, watching everything, and then I took the entry on a I was anticipating institutional order flow entry drill on the 1 minute, got picked up on it. It actually wasn't an entry drill, it was just a gap fill, got picked up on it, and got almost got my head took off by the news. But because of ICT's teachings, and I took my stop at a place where I say, okay, I'm giving it to the bottom of this fair value gap, and I'm going to tuck my stop under the low of that candle that made the fair value gap. And when the news went off, the algos wicked down, came down to an order block that was right inside that fair value gap, respected the wick of that order block, and turned around and went the other way. So I was safe. If I would have just did a 1-to-1, risk 5 to get 5, I would have got wicked out of the trade, would have went home with tears. No, if I'd have went 1-1-5, I'd have been out of the trade before the news. But if I just randomly put my stop loss somewhere, then I would have got wicked out of the trade, because there was another low I could have put my stop loss at, but that would have got hit during that news candle wick. So that's why it's important to have a strategic place to have your stop put where it's a high probability of it being safe. And that's, you know what I'm saying, come from just reading the price action. And shout out Michelle, not Michelle Tucker. Shout out Here to Learn and Share. That's why that's why the core content works for me, because that gives me the opportunity to understand all of the ICT teachings. And then now I can slowly glue it all together like, oh, this is why this and this is why that, and I could build the whole cake because I got I can bake the whole cake because I got all the ingredients, right? Instead of just going to the store and getting my one slice, which is the 2022 mentorship model. Now I can make the whole cake, and I'm perfecting the recipe now. It's starting to taste a little bit better. The cake's starting to taste a little better, but when I get it there, I'm gonna be a beast. You feel me? And here comes the eraser liquor. Hey, Robson. Yeah, come here. Let me holler at you. Let me holler at you, Robson. What's going on, man? Hey, let's get it. Let's get into it, man. I don't waste a whole bunch of time. Judas swing. Who was that asked about the Judas swing? Mendez, right here. This is what I was talking about. See this right here? This is the Judas swing right here, right? And what makes this a Judas swing, right? Because here's the midnight open. See how we was consolidating throughout the Asian and the London, right? Right, and then we opened here at 12. Then this is a big Judas swing because look how far above the midnight price we came. We came really high above the midnight price, right? Came all the way up here, took out. No, we didn't take it out. We made equal highs above some with some buy side here, made equal highs, right? Got real close to this buy side, took out the overnight high, took out the short-term buy side here, right? And then we dropped forever, looking like we was heading to the external look sell side, right? And then we just stopped it. I'm not, right? Stopped it there, then reversed, and then came back up for the day and took out the buy side. This is the Judas swing right here. Down. No, I ain't going down. I'm going up. It's just a really big Judas swing, right? And this is a power 3 day, right? It's a really big power 3 day because we got a little bit oomph at the end of the day. But see, it's a power 3 day here because on the New York, we opened here, came down and went up. So it's power 3 on the New York, right? On the what's the name? We opened here, went below, and then went up and closed at the high. You see what I'm saying? So it's power 3 on the New York, on the SPY, and it's power 3 on the ES because we got the accumulation, the manipulation, and the distribution, right? And then it gave you ample opportunity to get long below the New York. It gave you opportunity here before the 9:30 open, right? And then it came back here again and gave you opportunity to get long below the midnight open again, just before going into lunch. So you had 2 opportunities to get long below the midnight. And on the power 3 days, you want to get long or short as close to or above or below midnight, depending on if you're going long. If it's a power 3 to the upside, you want to get long as close to midnight open as you can or below. And then you want to get short as close to midnight open as you can or above. Right. So it gave you 2 opportunities to get long on the power 3 day. And today was just a good day for everybody. You got a chance to get short and you got a chance to get long. London gave you opportunity to get short. New York gave you opportunity to get long, gave you 2 opportunities to get long. And during New York. Let's walk through the price action real quick, and then we'll see if anybody got any questions. Yes, don't need that. All right. On the hourly candles, as you see here, like we was talking about, we talked about that in the overnight. So let's just come over here to the New York, because we talked about all this in the overnight price action. I think we did. So looking at how we came down here, just on the higher time frame, right? This is the same. This is the logic that I used on the lower time frame when I was like, it was the same model that ICT was using. It's just pretty much like I always do when I'm always looking for a balanced price range, and for the algos to give me a clue that, hey, this is a balanced price range. I'm ready to go, right? So see, we got these two huge down close candles here, three counting that one, but we got these huge down close candles here, right? We got a sibby there, right? Then we come back with two huge green candles coming all the way back up to the top of the sibby, right? This one here, we come almost to the top, come well above consequent encroachment on the bottom sibby. Then on this one here, we come all the way back up, all the way to the top of this sibby right here, right? So we got sell side and buy side offered there. And then we set an order block right here, right? Once we set this down close candle, we traded up past it. Now, this is a potential order block, right? Now, when we set this as an order block, right, there's three places you're going to watch on the order block to see if it fails or not. The first place you want to watch is the wick, or the highest high. If it don't have a wick, it just starts and go to the highest point, right? The second place you want to watch is the open, the last line of defense before you move to the sideline and say, okay, the bullishness off in this case, because this is a bullish order block, right? The last line of defense is the mean threshold, right? So once it respects, if it respects the wick, automatically you go to your lower time frame, start looking for your entry. If it respects the body, you go to the lower time frame, start looking for your entry. If it respects the mean threshold, you go to the lower time frame, start looking for your entry. But if it don't respect the mean threshold, you hold off and just wait. It may still, because it can come all the way down to the bottom, but you just, if it come all the way down to the bottom, you move to the sideline and wait for further confirmation that it do want to go up, or you wait for confirmation that it want to go down, right? What's your confirmation that it want to go down? When it come back down and start, if it break this low, you can start looking, and especially if it break that low, you like, okay, we going down here to this low, right? So just remember that. Just want to share that, right? So we came down, we went up. That's the 60 minute. Let's go down to the 15 minute and look at some more detail about it. Some more detail about it. So on the 15 minute, we opened up the New York session down here at 39.68.25, right? We opened up at 39.68.25, continue to go up, right? We continue to go up, and then we started to consolidate at the midnight at around 10:30. We had consolidated right around midnight at 10:30. And then let's do our field projection, see how that would have worked out for today. If we would have been looking and say, hey, let me do the field projection and see where it takes us. Would you look at that? Would you look at that? I just took it straight to the top candle to see if that would, but look at that. Random fibs at that 50% when we got that 10 o'clock and start consolidating. Look at that, right at the bottom of that order block right there. Once we trade it back through that, that's a potential order block, right? That's a potential order block. That's a potential order block. All those potential order blocks, right? All of that potential order blocks. But, you know what I'm saying? Because it's a down close candle in the uptrend. So you like, okay, there's a down close candle. That's got the potential to be an order block. Up. No, it's not. This is down close candle in the middle of uptrend. That's got the potential to be an order block. Up. No, it's not. There's another down close candle. Oh, yeah, it is an order block. Let's go. Let's see what's going on. You see what I'm saying? Because it made it an order block. But when you get up here to that first one, just stop it right there, the first one, and at the open of the actual order block, right? This is at the close of the first one. That was a potential order block. Then at the open of the actual order block, look at how precise the algo is. From there to the open of the actual order block at equilibrium, all the way to the tippy top. Look how accurate those algorithms are. Perfect algorithmic trading. How do I know it's perfect algorithmic trading? Because it's time-based. This low was made on the 845, 840 candle. If you know 830 candle, if you're on TradingView, right? This order block was made on the 1145, 1130 candle if you're on TradingView, and all of that is inside the New York kill zone, the New York morning, and the London. This is part of the London close from this 11 o'clock to 12 o'clock. That's the London close. So all that's a London close. That's a hot zone for ICT. Not so much as he used to be for Forex, but it's still semi-relevant. New York open, that's a hot zone. And the New York kill zone from 7:30 up until 8:30 up until 9:30, right? 7:30 is more so for Forex, but New York kill zone for futures, 8:30 up until 9:30, 10 o'clock, 11, up until like 11, from 8:30 to like 11, whatever, right? So all of that is during the algo time. So this is perfect algorithmic trading, right? And then the little, the thing that I oopsed up on one day when I was like, hey, if it consolidates at equilibrium, if I see it start consolidating in an area, I can just take the fib and run it from the high or the low of that price leg, and I could project where price may possibly go. And it's been hitting like hitting. It's been hitting like Jackie Robinson. You hear me? As you see right here. I just checked it again. So this morning, if you did not catch any move this morning, and then when it started consolidating here, this is the beauty of hindsight, but you could have grabbed the fib, right? Let's do this right here. Let me turn the snap off and just share with the people what be going through the mind of little Timmy Rogers, right? I'm going to put this here. I'm going to slide these candles out the screen where you can't see them, right? And you say, okay, we're getting ready to go into lunch. It's almost 12 o'clock. It's 11 something. Like, okay, I've been here since it's time for me to get off. It's 11:30. I should have been gone. We're starting to consolidate here. Let me run the fibs up and see where we can possibly go. So you just run it up and you say, okay, this right here, it looks about equilibrium of the trading. Or you can be like, okay, I want to split the difference between all of them. You know what I'm saying? From this candle's low to the candle's high. So we just gonna split, you know what I'm saying, what's going on with that candle there, right? That's just split it right through there, right? Let me get it back. Right? We're gonna split that big candle right there like that, right? Then you'd be like, okay, that's above the highs. So I'm going to target the daily high because it's above that high. I ain't going to try to get the wick top. I'm going to target the daily high once I come back in the afternoon, right? Then you start moving over, get out into the afternoon time. What time is this right here? 12:15, right? Okay, here we go. All right, 1:30, right? 1:30. Say you come back here at 1:30. So this is 1:30. Now this is the 145 candle. When you got back here at 1:30, you know what I'm saying? You could have been looking for an entry around here somewhere. This a 15-minute candle, so a lot could happen in that 15 minutes, right? So just say you're looking for your entry. Say you happen to find, you came back here at 1 o'clock. You happen to find an entry right here on this candle right there, and you shooting for that because the fib extension saying, hey, we can possibly go up there, right? We already know how it play out, but There you go. Pay the trader. Profit target hit. Profit target taken. Right there. Boom. Pay the trader at 15.45. Right there. You know what I'm saying? Using the fear projection technique right there. Hopefully that helps somebody. What did price actually do? We down here, the move up was on the lower time frames, but we came up, hit this fair value gap there above this high, consolidated, pulled back down at 12. This would be like the 11:45 candle on Trading View, pulled back down into this fair value gap right there, right? And then went back up. This right here is what I was talking about on the higher time frame. Like this right here is showing the possibility of being that balanced price range, right? You got these down close, then you got these up close candles here, right? You got a fair value gap on this side, you got a fair value gap on that side, right? So you're watching this to see if this is a balanced price range, right? You set a down close candle here, right? We trade back down to the fair value gap, right? Right there, you set this as now you're watching this. You was watching this down close candle here, right? That was the first one. Up, it ain't give it to you. Start coming down. So now you turn your attention to the fair value gap. Where the fair value gap hold? Boom. Came down, filled the fair value gap. The fair value gap held. When it left that area, it left with some authority, right? Creating this order block and a fair value gap right there, right? You hoping that this fair value gap don't get filled all the way in. That is going to be like what this leaving and creating this fair value gap. That's your confirmation. Once you break this high right here, once you break this high right here, right, with this candle there, once you break that high right there, that's when we pop through there. You go into the lower time frame looking for your entry, right? You go into the lower time frame looking for your entry. Turn the snap on so I can get it together. Right? Hot dog it, Tim. All right. Drop down to the 5 minute. Boom. Come down to the 5 minute. This right here is the high of the 5 minute order block right there. Right? When you pop through, that's when you broke it. As soon as you break it, you dropping down, you put in the line, marking out the go back to the 15 minute. Right? Soon as you break that right there, soon as you break that area right there, you're dropping down to the lower time frame, right? I'm marking this out right here because this is hindsight, and you see that that's the fair value gap, right? I'm marking this out because actually this right here, the fair value gap got made later. But soon as you break this right here, you're watching that high right there because you just broke it, right? Now you're sitting in there. That's the high that just got broke that you're watching, right? You went through. There's your fair value gap right there, right? You come back down into that fair value gap right there, and you're gone. This is a secondary entry right here from when you was on the higher time frame. If you missed that one, that's the entry. That's the clean entry on the higher time frame, but you're on the lower time frame, so you wouldn't even realize that that's what that was. You know what I'm saying? But looking at the higher time frame, that's a secondary entry. This is the one where I said I can't take that. Looking at this time frame, I can't take. Like if I missed this right here and it came back there, y'all saw it today. It happened down here. I did not take that trade when it came back. Those scare me to death. I don't know why. Right? Especially after we took that high out right there, and then we start coming back down. What I said today, I said, if we take this high, I don't want this no more. When we was in this trade, I like, if we take this high, I don't want this no more. But it came and got me before taking that high. How we came up there, took that high, and then came back down, I wouldn't have been able to take that trade. But back to what I was saying, right? And then that's the high you was watching after we broke through that, come back down on the 5 minute, boom. That's your entry right there. And pang out, Bob's your uncle. Hopefully that helps somebody. I'm going to call it because I'm 5 minutes over. I'm going to call it because I'm 5 minutes over. Hey, Tim, what's your fib settings? Are you using the default? No, I'm not. I just have the open. I have the 0, the 50%, the 100%, and then I think I got 200. Like I got the extensions on it. Let me look. So I got the 0. Stretch it up where I can see. Yeah, so I got 0, 50, 100. Then I got -50, -100. The only thing I use my fibs for is finding equilibrium and one standard deviation extension. I just want to know where equilibrium is and what's one standard deviation away. That's the only reason I use my fibs. I don't use my fibs for no other reason. Like I don't trade OTE no more. So that's why you don't see, like if I go in here and change it back to my default, TLR default. Nope. TLR default is even different now. Let me see. There's this one. Nope. I don't have any of them no more. CBD dealing range. Nope. Okay. Let me go back to default. Matter of fact, let me go because the TLR default, I got like a red line there. Edit. So the 62, 70.5, and the 79. I got all those settings from ICT, right? And wait a minute. Something's missing. Why did it get here highlighted? Okay. Okay. So boom. Right. These are the settings that I got from ICT. Right. And the from 62, 79.5, 62, 79.5. This is the it's another one in there somewhere that I don't know. I feel like something's missing. 70.5. There it is. Okay. I'm like, something's missing. Okay. So these 62, 70.5, and 79, this is ICT's OTE entry range, right? This is the early entry. This is his preferred entry. And this is the least risk to reward. Lowest risk to reward, because using his OTE, you put your stop below the 100 and you enter in. The early entry is the 62%. His preferred is the 70, and the lowest risk to reward is the 79. And all of them, you put your stop below the 100, right? I don't trade OTE no more. And for anybody who don't know how you trade OTE, it's like a retracement thing. So you'll go from like the bottom of this run up to this right here. Just go to that high right there, right? So let me spread this out so you can see it. Get the candles nice and big. Okay, so let's say on this run up right here, this leg right here, right? And I don't know if it's gonna fall in there, and it does, right? So let me spread this out in time a little bit. Let's go over to 11 o'clock so you can see. If I put 11 o'clock, right? So if you notice, from this low up to this high on this price leg right here, right? When it came back to this fair value gap, that gave us a 62% OTE entry, and it gave us a 70.5 OTE entry right there, right? And so on here, if you traded OTE, when you start to run up and you got this breaking market structure right there, you would take your fibs and run it from the low of the price leg and run it up to the high of the price leg when it starts to pull back, right? If you take it off the 62, you take your entry there, put your stop loss below the 100, right? If you take it off the 70.5, you put your entry right here at 3,996.20. I mean 3,996.25. If you take it off the 62, you'll put your entry at 3,967.50. And then if you took it off the 79, you'll put it at 3,964 or 3,965, but you wouldn't have got picked up on this right here. But I don't trade OTE no more. The only reason why I use my fibs, and I know you only ask me what my fib settings are, but when I start running my mouth, I can't help it. The only reason I use my fibs is to find equilibrium and one standard deviation. So I only have 0, 50, 100, negative 50, negative 100. So that gives me this, when you measure the move from 0 to 100, one measured move equals one standard deviation. So it gives you one standard deviation away. That's all I want to know with my fibs. That's all I use them for, because I want to know where equilibrium is, because equilibrium splits premium from discount. That's a whole lot of talking, but I hope I help somebody. What's up, Zay? When you pulled up in here. Hey, Tim, what said it? That's what I just, I answered that. A couple people asked that. So hopefully that helped both of y'all. How do you know where to put the top of the fibs? I feel like I missed something. Like, say we didn't know the high price went yet. Yeah, you did miss it, Sanjay. Let me say it again. Right? Let's say it again. We can't see all of this over here, right? This is just for my field projection technique that I oopsed up on one day, right? I oopsed up on this one day because I was like, hey, if the market consolidates at equilibrium, if I see it start to consolidate, it makes sense for me to go to the high of that price leg where it's consolidating it, or the low of that price leg where it's consolidating it, and just run the fibs up until my 50% gets to that consolidation, and that will give me a good estimate of where the market's trying to go. So we get our fibs, our Fibonacci's, right? And see, this is the run up. This is, you can use this low or that low because it's inside consolidation. But since this low right here is right next to that one and it starts to go up there, let's just use this one, right? So we click on there. Let me pause this here for a second so I can unlock this snap, right? So then once you get the low or high, depending on which way it's going, right? You run the fib, just keep pushing the fib up. I got to squanch this. Let me squanch this down, right? Right. You keep, now we can't see those candles. You keep pushing the fib up, and it's on you to decide where you want to put the 50% line on this consolidation, right? What I try to do, I try to pick a spot where, like, if we got a big candle in there that's taking up like the full range, I try to go to the mean threshold of that candle. Or if we got something that looks like a definite order block that we are, like you say, we already left this consolidation and we got a definite order block, I try to go to like the open or the close of the order block, depending on if it's up or down. But we ain't, you know, we gonna act like we don't know hindsight that this is the order block. So in this case, I'll just come and try to split this big green candle, because this big green candle go from the low, that's like one of the lowest bodies, all the way up to one of the highest bodies. So I'm just going to split that big green candle right there with the 50% line. And then once I do that right there, I'm just going to put it there. Let's just say right there. Let's just use the high of this candle right here to give us some, you know, some eyeballing, right? sit it on the high of that candle right there. And once I sit it there, now I can say, okay, the market will likely go up to 40.24.94, right? As a trader, I know this white line right here is my daily high. This is my buy side rest up here. Now that gives me a target to shoot for, right? If I see an opportunity to get long, this going to be my target at this high at 40.21.75. My target going to be 40.21 or just say 40.21 even, right? Because I'm not going to try to go all 40.21 even is going to be my target, right? Because that's the high, and I expect it to take out that buy side. That's my target, right? But you put the fib, you run it from the low or the high, and then you put the 50% in the consolidation. I told you how I like to do it. You could just go and just try to split the whole consolidation. I told you the things I like to look for, and then that'll give you a good projection of where the market may go. And I just thought that up one day while we was on live. If you would have been in class, Sanjay, you would know this. But I thought it up one day while we was on live. I was like, hey, let's try this. And it's been hitting. It's been working. Shout out to gang members who've been letting me know, like, hey, Tim, that's been hitting. I appreciate you. You're welcome. Now, Sanjay ain't gonna say that no more. Them jokes. If we did not get confirmation, and if the fair value gap did not hold, how would you draw your fibs from the candle to the downside? I wouldn't worry about drawing my fibs to the downside. If we let me move over. Where were we at? Right here. Were we here? Yes, we were here. This is where we were at. Right there. Right. Did I put it on the wrong one? Am I in the wrong spot? Am I in the wrong spot? Where am I? Yeah, 1330. There we go. Right there. I was in the right spot the first time, because that's the one right there. Is it? I'm lost. Anyway, if we don't get the confirmation, right, I wouldn't look for it. Right? I wouldn't draw my fibs. If we just say here, right? If we came down over here, this is where we was at, right here. Right here. That's it there. Boom. Okay. All right. Let's just say we came down here and we pushed back up right there, came up, and we took out this short-term buy side right here. I'm looking for this right here. Let's say we came down and we went long here, but it failed. And it came out and stopped us out, right? It came out and stopped us out. On this 5 minute right here, this right here is my line in the sand, right? My stop loss gonna be here, right? This is my line in the sand for my bullish thesis right here, right? So if I enter there and we come back down and we start going and this right here fails, right? My stop loss here. If this order block here fails, right, now my bullishness is over. Okay, we ain't going up right now. We coming down. I wouldn't worry about drawing fibs, right? once we broke this low right here, if we came down, right? So we, oh man, I done hit the wrong thing. All right. This candle over here, we came down, right? Bust through. Once we break this low right here, we ain't even got to close below the low, right? It'll stop me out. We come through, we break this low right here, right? That low has been broken, right? That low has been broken here. So boom, we done broke this low. It done stopped me out. So now I ain't gonna worry about running fibs right now, right? Because I just got stopped out. Now I'm bearish. So now once I broke it, not like once I broke that right there, now my bullish is off because this was my last line of the sand, right? Breaking this low right here is a shift in market structure, right? Now that we done shift the market structure, now I'm looking for right. I'm looking for a reason. Let me draw this out. Do it like this right here. I'm just doing it like this right here. I'm looking for a reason to go short, right? Because that's what I done broke the line in the sand, right? Now I've gone short, right? Low, just say low hanging fruit because it's just, and then look, I drew that perfect. It's right there at an order block, right? Came down, low hanging, this low right here is low hanging fruit. I can target that as my exit or target that as a shave point, right? We got this, what's the name here? We got this order block right there. We can say mean threshold of that. Look, I stopped it perfect again. We can say mean threshold of that could be another place to shave, right? And then we can target this low right here could be another place to shave. Then the ultimate target will be this low, right? So I wouldn't worry about running fibs again if we didn't get the confirmation going up, right? I just run the fibs to project where we going, you know what I'm saying, once we already going and then start consolidating. That's the purpose of the fibs. The I don't want anybody to get dependent on the tools. It ain't, the tools just help us visually see the price action, right? Because when I'm selling, or when I ain't gonna say when we're buying, right? When we're buying, right? When we're buying this fair value gap right there, right? When we got dog it Tim. When we're buying that fair value gap right here, that blue box, the algos have no clue that that blue box is on our chart. Could care less, right? The algos could care less that we ran a fib from here up to that 15-minute order block and said, okay, the price gonna potentially go up here. The algos care less. So I used to, when I first started trading, I was highly dependent on the tools. I was highly dependent on fibs. That's why I don't trade OTE no more, because I was so dependent on the fibs that I would pick a low and a high, run the fibs, and if it hit 62 or 70, I was buying or selling, because I would just pick any low, any high, run the fibs, and if it hit that, ICT said if it hit this retracement, it's supposed to bounce, without even having any thought process behind the price action. You know what I'm saying? We just got to figure out where price is trying to get, and then use the tools to help us visually see it, because Robinson probably got a computer brain in his Chrome Dome, and where he can look at this low and say, okay, that low is at 39.62, right? And then run some mathematical equation to say, okay, I need to set a reminder right here at, let me go to this 15-minute candles. I need to set a reminder right here at 39.62, 39.92.75, so that I'll know that that's the midpoint between where I want to go all the way up here at 40.24.25. Like, I can't do that. I can't look and be like, okay, take this number with this number, gonna give me this number. I can't do that. I'm not a computer. So I look at the clues that the algorithms leave, like it likes to consolidate at fair value. And what is fair value? Equilibrium. It likes to consolidate at equilibrium. It loves to do it. It does it all the time, right? And that's how I try to get in sync with the algos, by saying, hey, look, we're consolidating here for a long time. Let me go to, we're going up and we're consolidating. Let me go to the low prior to this consolidation and figure out where we can possibly be going. Depending on the time frame you're doing it on, you may get there today, you may get there tomorrow, you may get there next month, because it take, like, if these were daily candles, this would be a really long time, right? We would have came up 1, 2, 3, 4, 5 days, consolidated for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 more days, and then went up for 1, 2, 3, 4, 5, 6, 7, 8, 9 more days before hitting our target. If these were daily candles, that's a really long time. I'm pretty sure that's more than a month. I wasn't keeping up, but I'm pretty sure that's more than a month, right? So try not to, I done got so far down the rabbit hole, I'm lost right now, but try not to worry so much about the tools as to why am I reaching for this tool. If you going on a construction site, right, and you need to cut a 2x4, you can use a handsaw, you can use a jigsaw, you can use a skill saw, you can use a saber saw, right? Timmy Rogers gonna reach for the saber saw because it's the most efficient. A handsaw, I'm gonna be forever. A jigsaw might break my bit. A skill saw, it's gonna cut quick, but it may not be straight. You know what I'm saying? But a saber saw, just throw it up there, pull it down, cut it quick. It's the most efficient. Why am I reaching for that tool? Because I want to cut this straight, cut it accurate, with the least amount of danger to me. This is the most efficient tool, right? Why am I reaching for that fib? I'm reaching for that fib because price started here, it moved to here, then consolidated. I'm reaching for the fib to let me know where price can potentially go on this run, right? Take your fib, run your fib. Price can potentially come back up to these highs based off of where I just ran this fib, right? So this is a potential target for me, right? Come over here. Price consolidated here, and we left this area right here. All of this down here is a potential. balanced price range, right? When we came back into the only inefficiency that's down here in this price range on this 15-minute time frame, we left with aggression, creating a order block off of this BISI, right? Took off. We know in hindsight it's a BISI after the next candle, but as soon as it created this order block, it cleared the high of that candle. You immediately drop down because this right here is giving you a hint that it's a balanced price range. The algos don't want to go back in that direction no more, at least not right now, because they gave you a clue, because they offered sell side, they offered buy side, they came back to the only inefficiency that was down here, and then they left with a purpose after consolidating, right? So this is another clue. It consolidated. So this is potentially halfway between where they're trying to get to. Clue number one. This is potentially halfway between where they're trying to get to, right? This is a potential balanced price range, because when they left this halfway point, they came to the only imbalance, inefficiency, whatever you want to call it, and then they left with aggression, right? When they left with aggression, they created this order block, right? So you extend that out in time because you broke the high of that order block. They letting you know, I don't want to go back that way right now, right? Then you go down. Before you go down, you say, okay, boom, I see we broke the high of this candle. This candle's still working. It ain't got to close up there. It's still working. So you run that high out. You grab your fib, right? Why did you run that high out? They broke that high. This is an order block now. This is a potential order block now, right? Everything is potential. Nothing worked out. Potential order block. That's the high. Remember that, right? You can even go in and say, let me sit this here for a second. You can set the high, and then if you want to be, you know what I'm saying, extra like little Timmy Rogers, right? You come in here and set the mean threshold. We just gonna use that high of that candle right there to help us out, right? It looked close enough for government work, but you would measure out the body of that candle. So that's the high of the order block. It's a potential order block. This is the mean threshold of that order block right there. This is my line in the sand. If we break this mean threshold, I'm gonna move to the side to see if we really want to be bullish or if we want to go bearish, right? You take your fibs, if I can find it, and run it up until your 50% gets in line with the consolidation. We're using the mean threshold of this big candle here because it engulfs the whole consolidation range. It's one of the lowest bodies, it's one of the highest bodies, right? So we're going to use the mean threshold of that, where we're using the high of this candle to help us out. Now we see, okay, it's above those highs, so I can potentially use that high as a target, right? This right here can be low-hanging fruit, right? You can mark out where you want to shave off. This can be low-hanging fruit. You can start going in and making lines over there if you want to, right? You can plan all this out. Well, you want to plan all this out for real before you even get into the trade, right? This is low-hanging fruit. You know what I'm saying? That can be your ultimate target or your low-hanging fruit, right? I'm going to shave there, right? I'm going to shave here at this high. I'm going to take off 50% here.
Connection lost.
What you mean connection lost? I'm going to take off 50% here. I'm going to take off 80% here. Leave the last 20% to see if I reach my target. When I get to the 80%, I'm going to roll my stop loss from down here below this low up here to at my first shave point, right? Map all that out in your head before you get in there, right? But why did you grab this tool? Because I think I see that price is trying to get up here. It's consolidating here. That's halfway, potentially halfway. This is a balanced price range because it's potential balanced price range, because when we came back to the only imbalance, We left with authority. We created this order block. That's the high that it broke. This is the mean threshold of the order block. That's my line in the sand, right? I grabbed this tool to show me where it can potentially go. That's why I grabbed that tool. I'm not relying on the field. It matters not if I connected it to this low because I thought the low was pretty. It matters that I connected to that low because that low was the start of this run, and now we're consolidating, and this is the potential half point. That is the lowest point of this price leg. That's why I connected it to that low. That's why, and the fib is the most efficient tool to tell me where we can potentially go for little Timmy Rogers. Now that we got all of that, all this is going through your head in like, you know what I'm saying, 30 to 45 seconds. Now we're dropping down to our next time frame, right? The clock is still ticking, right? The clock is still ticking. We done broke through. We got us a 5-minute fair value gap right here, right? We take our entry right there, ignore the fib. The fib is gone now. We're not using that no more, right? So now we're looking. This is our high of our order block. This is our line in the sand. Now that we've dropped to the lower time frame, you can even refine it. You can say, okay, this is the line in the sand on the 15-minute, but we got a 5-minute order block. So I want my line in the sand to be the 5-minute order block because we may potentially come down to the 5-minute order block to test that, right? Because it's order block, right? This is the fair value gap I want to enter in on. You mark out the 5-minute fair value gap. The algos have no clue that you put that box there. But the reason why you put that box there is because when we left this area, we left with authority, right? Set an order block. Got a break in market structure right there. This is the only inefficiency in this area. So you're entering on the only inefficiency in this area. Right? If you had 2 fair value gaps, you choose which one you want to enter by looking at the price action to see, did we make a breakaway gap and then form another fair, like here. If we would have took off here and left a fair value gap there, and immediately after that fair value gap, we made this fair value gap, you can assume that this bottom fair value gap is going to be a breakaway gap, and they probably won't go back to it. And you can enter off of the top fair value gap. And if they go down to the other fair value gap, you can add to it by taking institutional order flow entry drill if it pokes into the fair value gap and comes back out. But that's how you pick which order block you want to use, right? You look at the price action and say, okay, this is a potential breakaway gap, so I'm just going to go in on this one. Or you can just hold and wait to see if it come back to get you. And if you be like, okay, it didn't come back to me to get me there, now we done made another order block here. So when we coming back down, right, I'm going to take it off this fair value gap again because we left an order block there. It has nothing to do with the drawings on the screen. It's all about reading the candles and trying to get the best entry based off reading the candles. And I said a whole lot of stuff, and that was all because it's not about, because she asked about running the fibs if we didn't get the confirmation. I wouldn't run the fibs in this instance because there's no need to run the fibs in this instance for the downside. The only way I would run fibs to figure out where to run it for the downside is if we, like, just take this for example, right? This for example, we didn't know, I don't know this is going to reverse right there. I would take fibs and run it from here and put the 50% down there. You know what I'm saying? To say, okay, we can potentially keep going down, right? That's why I would run fibs here. We can potentially keep going down, right? If I thought we can possibly keep going down, right? But that's just a possible target. If we break market structure back up, that's off the table. That's off the table. Now I'm looking for a reason to go long right here. Now, the next time it's time to pull out fibs is after we done went for a long time like this right here, and now we're consolidating again. Now, I could pull out fibs and be like, hey, I never got a trade opportunity in here. Let's see if there's more legs left on this run. Then you will run the fibs again. Hopefully, all that babbling helps somebody. Hopefully, all that babbling helps somebody, because I talked a lot just then. I talked a lot this gen. I asked because I see people have 100% at the bottom, but some have. That depends on how you run it. That depends on how you run it, Sanjay. Right? If I click it and pull it up like that right there, see, that just depends on how you run it. But if I run it this way right here, the 0 at the bottom. See what I'm saying? Like if you actually see, you see what I'm saying? Depending on how you run it. I just want you to see if you actually run it, that's what it'll do. Instead of me just flipping it around, if you it just depend on if you run it up or down. Got about 40 of these on the screen now. Get out of here. That was a Googleable answer, Sanjay. You can answer my question next week since it's after 7. I already did that. Otherwise, we'd be here for another hour. Get off my live. Get off my live. Exactly. You already know. I ain't gonna hold you. Hey, Tradition, I appreciate that. I appreciate that. I appreciate you. It's all gravy. My sweetie in here too, so she ain't said that, so y'all good. Oh, I ain't fooling with y'all. I ain't fooling with y'all today. You know how Reverend would start giving the word, sir. The whole time. The whole time. You feel me? Put my finger up, one should let me out. No, they ain't gonna let you out. No, they ain't gonna let you out. You feel me? Praise dancing. You better stop. Give yourself a quarterly. Okay. You're welcome. After all of the clowning, you're welcome. You working? Okay, then you work in the construction industry. My daddy was a carpenter. How do you tell the preacher to shut up? Hey Margot, how do you tell the preacher to shut up? Okay, Tradition, I appreciate you for the super chat. Hey man, look here. Don't put off till tomorrow what you can say today. Right? Y'all got off scot-free, not saying how your week went today. I mean, you know what I'm saying? Like, if y'all ain't do good, you ain't do good. If you messed up, you messed up. If you did good, you did good, I guess. Y'all ain't want to come with no accountability today. But don't put off till tomorrow what you can say today. Do not wait. Again, I just told y'all yesterday how it was like total devastation near my and in the area where my wife work at. Lot of destruction. I think they said a quarter mile away from her facility where she worked. Quarter mile difference. Thank the Lord. Let the people that you love know that you love them today. And again, speak in their love language so that they can receive the love you're trying to give them. If your parents are still here, call them. Hey, mama, hey, dad, I was thinking about you. Do not put off till tomorrow. I say this from personal experience. I kept putting off, and I never got tomorrow to say the words to my dad that I really wanted to say to him. Shout out to all the cousins that's living with loss, dealing with loss of a loved one, loss of a spouse, loss of a parent. I haven't lost my spouse. I can't speak on that, but I've lost a parent, and I can share with you all that it never gets easier. We just learn how to stop crying about it. We learn how to move on, right? So express your love to your family members and your friends, because no one has promised tomorrow. No one knows what can happen the next minute. Like I said, quarter mile. A tornado, y'all know how much destruction a tornado causes. A quarter mile away from the facility where my sweetie work at. A lot of her co-workers suffered damage to their homes. One of them suffered tremendous damage. People had to chip in and help out, but no fatalities. Thank God. Material stuff can be replaced, but take advantage of today. I appreciate y'all, man, for always tapping in. I appreciate you. Seriously, I hope I was able to share something tonight that helped somebody in the terms of trying to understand how to read the price action. This is how it makes sense in my mind. Hopefully, I was able to help it make a little bit more sense in your mind. It's been working for me. Hopefully, it'll work for you. I'm going to continue to build because I'm telling you, one of these days, I'm going to be counting. I'm going to be reading these candles on the 1 minute chart like ICT. I saw this man trading on a 10-second chart. The same strategies on a 10-second chart. Hey, man, once you get the knowledge, they can't take that away from you. They can take away a lot of stuff, but once you get the knowledge, they can't take that away from you. You feel me? Hey, man, I appreciate y'all. I see y'all Tuesday. This Sunday. We ain't gonna do no weekend chart prep this Sunday because I think the market closed Monday. So, yeah, I think the market closed Monday. If the market closed Monday, we're not gonna do a weekend chart prep this Sunday, right? So yeah, y'all have a great weekend. Y'all enjoy your families, and I'll see y'all Tuesday at 9 o'clock for the overnight price action. Go, man.